Net worth is often thought of as how much cash you have, but that's only one component of it. The other components are the assets you own. Regardless, the cash you have is a good gauge of your current financial situation. It's even a decent choice to put your money in a savings account as the growth keeps up with inflation. But the major drawback is that it's extremely slow and won't get you rich. So, you must find assets that will give you more than cash in the long run. And in this video, we'll show you the best 15 assets that are better than cash in 2023, according to Warren Buffett, so you can all retire early. Number 1. Livestock. Believe it or not, pigs, cows, chickens, sheep, and goats are all considered assets. To be more clear, animals that are raised for future use are considered capital assets, which makes them no different than stocks. Amazingly, the expected return is quite good, and it certainly should make you consider investing in livestock. If you're worried about the risk, then know you'd be helping the 1.3 billion people continue living in the way they are, as 40% of the livestock output comes from the first world countries and 20% comes from developing countries. The only way that this would slow down is if humans no longer have to eat, which really doesn't seem like anytime soon. Number 2. Land. Something that comes with livestock is land. You'll need land to keep them on, but the land is also an amazing asset to have.
If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do it all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years.
According to the U.S. Department of Agriculture, they say that they are confident in the amount of land that's currently available for growing crops and don't need to make more. That means it's a good time to hop on the bandwagon. Over the last year alone, the cost of land increased by a whopping 7%, and that's not including the products you sell from owning the land. This strong upward trend has been continuing since 2007, so consider this if you're looking to get rich. Number 3. Mutual funds. Stocks are the primary thing people think about when it comes to investing, but there's another safer option. As stated by Value Research, over the last 10 years, there's been an average return of about 13.36% from large cap funds. On top of that great return, investing in individual stocks is much riskier than owning shares in a mutual fund. Depending on how much you're saving into mutual funds, you can be a millionaire in as little as 10 years. Not surprisingly, a big advocate of low-cost index funds is Warren Buffett. It's a great choice because you don't have to do any research, as the index is composed of all the stocks in a specific index. For example, the S&P 500 are the top 500 companies in America, and if Buffett says it's a good choice, then you should definitely consider it. Number 4. Raw materials. Investing in raw materials is a great option if you're looking for low risk and a way to diversify your portfolio. Typically, raw resources are used to generate goods and services that we use every single day, like our phones or computers. These are usually gathered from material stockpiles. However, the businesses that use raw materials and the raw materials themselves don't usually increase unless there's a robust economy. Regardless, having some investments in raw materials can greatly benefit you both during the economic upswing and even during a downturn, as they tend to produce a consistent cash flow through dividends. Some example companies are Nucor and Tinto. Number 5. Real estate. Real estate has always been looked at as a prized asset, and it's for good reason. They usually have very little volatility when compared to stocks, and their value constantly rises over time. I'm sure many of you know the struggle with insane house prices. However, the constant increase in value means that you can always expect consistent returns. For example, a statistic from Zillow said that the largest real estate market in America has currently doubled in the last 5 years. That's quite the return. So despite the crazy increases in home prices, it may be a good time to consider jumping on it as an investment. Number 6. Vintage cars. It's normal to associate cars as an asset that's constantly depreciating. And while that's true for a majority of cars, there are some that actually increase in value over time. The types of cars that increase in value usually have something that goes beyond the basic car, and no, it's not what you think. These unique cars either have important history, art styles, or engineering, and they are exclusive in the sense that there aren't many available. These are all areas of interest for auto enthusiasts, history and art buffs, and those interested in engineering. An example of this is a 1955 Benz 200 SLR Coupe. It's significantly increased in value since it's been made. Another amazing example is the current most expensive car, which is the Ferrari 250 GTO, which now costs over $50 million. If you're interested in this asset class, you can expect an average return, at least from Ferraris, of about 8% per year. Number 7. Value stocks. Investing in a business is a pretty daunting task, as there are so many metrics and measures you can use. However, there's one specific metric that Buffett advises against. He says that purchasing simply because you assume the value will rise is a horrible idea. The problem with that is that you can't actually predict what's going to happen in the future. Everything is based on probability, and that one is not really in your favor. If you want to get better about making good choices, however, be sure to subscribe to Investors Weekly.
When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced.
Some companies that have increased in value over time are consumer good companies, like Coca-Cola, which Buffett has held for 35 years, and tech companies like Apple or Tesla. Number 8. Luxury handbags. You may be wondering what's going on, but it turns out that your wife may have been onto something when she wanted that overly expensive handbag. While having a Louis Vuitton bag is a flex, it's also a long-term investment. Like vintage cars, the really high-quality made purses and handbags are appreciating assets mostly because of some rare features like being made from lizard, ostrich, or crocodile skin. For example, over the last 35 years, high-end Birkin bags have soared 14% annually. That's a better investment than holding the S&P 500. In fact, some bags can even cost millions, like the Mauawad 1001 Night Diamond Purse, which costs you a grand total of $3.8 million. If you're interested in this investment path, know that you'll need to spend between $10,000 and $30,000, which is massive. However, you can opt for a discount price on QVC or Poshmark. Number 9. Commodities.
To pick a product, crude oil, cotton, gold, silver, anything that, and of course cotton has utility. Gold really doesn't have utility. I would bet on good producing businesses to outperform something that doesn't do anything over any period of time. But there's no question that rising prices create their own excitement. So when people see gold go up a lot, I mean, if your neighbor owns some gold and you think you're smarter than he is and you didn't own any, and your wife says to you, how come that jerk next door is making money, and you're just sitting here, it can start affecting behavior. And people like to get in on things that have been rising in price and all of that. But over time, that has not been the way to get rich.
Commodities have been around long before money. In fact, it used to be the main method of trade, hence the name barter system. However, the growth and usefulness of commodities as an investment have skyrocketed due to computerized systems. Now, you can trade virtually any metal, energy good, or even agricultural items as options, futures, and forwards around the world. The best part is that when you buy 10 tons of wheat, you don't actually need to own 10 tons as you would in the past. This convenience allows all sorts of people, like traders, arbitrage experts, and hedgers, to choose a diverse array of investments and strategies to match. Another huge benefit is that it's inflation-proof, as prices move in a positive correlation with inflation. In other words, as inflation goes up, so does the price of commodities. Of course, it takes research to understand commodities better, but you can always opt to invest in indices that are pre-made to have more stability. Number 10. Luxury watches. One of the reasons you aren't rich like Mr. Buffett yet is that you spend too much on liabilities like devices and gadgets. However, just like vintage cars and luxury handbags, luxury watches are another asset class that appreciates over time. It's usually one of the reasons why you see rich people having fancy Rolex watches. Typically, the rarity or production of the watch is what makes it appreciate with time, and the best part about this asset class is that as long as the currency valuation is going upward with inflation, so will the asset appreciate. For example, a Rolex from 1957 now costs $5,300, which is a major investment if you bought it back then. As of right now, some of the most popular choices as investment vehicles are the Rolex Submariner, a Cartier watch, or the Tech Philippi Nautilus. Number 11. Fine art. As weird as it sounds, there's actually a huge market here for investment. You may be wondering why rich people invest in art pieces that are so unbelievably simple and boring. Or why do those art pieces cost millions of dollars? If you guess that they are good investments, then you're absolutely right. Wealthy people use art as a bag of value, considering that people are always willing to pay huge money for priceless art pieces. Believe it or not, owning fine art has a statistically better return than the S&P 500, making it an absolutely excellent investment. There's only one problem. You likely don't have $1 million to throw away on an art piece. Fortunately, there's a website called Masterworks.io that allows you to have a piece of the pie through fractional purchasing. In other words, you can use your money to technically own a fraction of the painting. Number 12. Platinum. Platinum is one of the 3 major precious metals, but most people invest in it for nothing other than the fact that it has a long-term worth due to its scarcity. It's a highly traded asset because it's much rarer than silver and gold, but it's still a solid buffer compared to currencies. It's known to hold its value well and move similarly to gold and silver. Number 13. Silver. There are a lot of benefits to silver that go beyond jewelry.
Is gold. And I've used this illustration before, but if you take all of the gold in the world, don't get too excited now, and put it into a cube, it will be a cube that's about 67 feet on a side. It'd be 165,000 or 170,000 metric tons.
Some of these areas are solar energy, cameras, telephones, and computers. Obviously, it's a very useful asset considering that computers and phones are part of every single household. One of the things that silver also satisfies is the Warren Buffett rule. This rule is that an asset should have a natural and observable value. Using an example, imagine trying to replace silver in its usefulness for computers and phones. It would be very challenging to do so, making it a very solid investment pathway. Number 14. Gold. What you may not have realized is that the price of gold has the potential to increase an amazing 1,000% from its current level by 2033. That's a potential 1,000% return in just 10 years. While this is just speculation, there are some fantastic times to buy gold according to Gold Silver. These times are early January, early March, early April, early June, and July. Number 15. Yourself. Before any asset, someone needs to purchase it, and that's you. You're the real money maker, and you're the reason why you can even get rich in the first place. With that in mind, it's always best to focus on yourself before any single asset. That means figuring out your skills and unique qualities and utilizing them for both your happiness and wealth. However, you may not have figured out what you love in life yet, and that's okay. Take the time to find what brings you joy and figure out how you can turn it into a career of a lifetime. Some motivational examples are John Curran, who is currently the most high-paid drawing artist, and Kylian Mbappe, who is the most highly paid footballer as of right now. These two are doing what they love and making tons of money, and there's no reason why you can't too. If you found value here, then like the video and let us know in the comments below what assets you invest in.